Let's address another set of earnings. We have with us K Srinivasan, the MD at Kirloskar Pneumatic, joining in on the show right now. Mr. Srinivasan, good to have you on the show. Just going through your numbers, your Q2 revenues was impacted on a year-on-year basis, I guess, owing to the slow offtake of CNG packages and also low export orders. Tell me, how are the early trends for the third quarter looking like? And then would second half be better than the first half?
Yeah, good morning to all of you. Thanks for having us here. I think H1 was muted due to two reasons. One is we couldn't execute on the CNG packages because while we had orders, the sites were not ready, so clearances were just not there. And export is also down by about 40 crores compared to last year. Primarily, gas packages going into the Middle East were delayed. H2 looks good because in the H1, we had about 850 crores of order booking, which is something like 65% higher than the corresponding period last year. We expect a very accelerated execution in H2, and even giving for the CNG packages not going to plan, we would still have other things that will cover up. So we expect still to deliver double-digit growth for the year.
Okay. Small changes. When you look at the narrative from the government, for example, what the Delhi government has said in terms of adoption of EV, given that India has some of the most polluted cities in the world, do you think other states could also follow this kind of a path and that could have impact on your business?
The gas burning engines are probably far cleaner than anything else that is available. So we must take it carefully. If you look at the government stated policy that as they've been putting out more GAs being given out for PNA RGB, the 12th round of bidding has been completed, they would like to bring in CNG or gas right across the country. The announced government principle is that the energy basket would have about 12% of gas compared to the current less than 6%. So gas being used more across the geographies is a given. Now, you cannot have gas at home if you do not have the commercial gas being available for vehicles because one, in a way, cross-subsidizes the other. So I think we must take all this carefully. I still believe that the government's overall policy of having a larger percentage of gas in the energy basket is more sustainable, and this is what it is likely to be. The announced increase in CNG stations across India is from 5,000 to 10,000 in the next 5 years. And this will happen. So we'll have to take announcements in Delhi, etc., step by step.
This given is on the oil and gas sector, and just wanted to know, given the kind of conflict that we're seeing play out in Israel-Hamas, are you seeing any disruption, any potential disruption perhaps that's anticipated when it comes to the ordering activity or the momentum from the Middle East?
Middle East is definitely going to see some slowing down of finalization or even execution of orders. Mercifully for us, we don't have any big orders for execution in Middle East for the next 6 months. We are negotiating orders for the next year, and these would all probably take a little more time than normal. The next 6 months for us is going to be largely driven by projects in India. And here we see accelerated interest in going for ammonia terminals, ammonia plants for fertilizer. As you're all aware, Government of India has more or less made an announcement that they would like to reduce or phase out urea import by 2025, which means more ammonia terminals, more ammonia plants, large projects in this space will be keeping us very busy for the next 12 months.
Fair enough. That's with respect to the situation in the Middle East. But back home, the Delhi EV policy as well that came up last week, where 100% of the aggregators will have to move to EV by the year 2030. Are there any concerns that demand for applications in that space will be impacted?
Like I answered earlier, yes, this is an announcement. We'll have to wait and watch how this plays out eventually. There is also equally strong move from the government to move a larger percentage of the energy to the gas basket. And that's also something that will have to play out. So let's see how it moves.
Do you think the Middle East business will come back?
It's going to take some time. It's too early to talk about it because there are orders that's being still given out. Like I said, LNG and oil from Middle East is still very important for Europe. It is not something that's going to disappear altogether. But new projects will definitely take more time than earlier.
Understanding of how many ICE engines will be ICE engine is the wrong terminology. How many diesel driven engines would actually be converting into CNG kits? ICE and EV is separate. I apologize. I'm talking about the change of fuel here, not the change of the engine mechanics.
So I think the move from diesel to gas is something that's pretty much happening, and that will only accelerate. Gas is definitely cleaner than the diesel engines, and this is also more efficient. So this is clearly something that is happening, and there the technology is proven. People have accepted it as less polluting, and so this is something that is happening as we speak, and this is something that will accelerate, because you must also understand that the households in India still are in the process of moving to natural gas in a significant way across India. And that would also mean that you need to have the gas pipelines, and then it makes sense to have this distribution also available for the vehicle. So this is a move that will continue. Now, what we did hear about the Delhi government is something we'll have to see how it plays out. Early days.
So at a time when you think that it will be hard for you to call out the real recovery process for next 2 or 3 quarters, then how do you think the capex and utilization rates would move? Are you committed to your capex, or are you likely to withdraw it? If your utilization rates they go down, could that have an impact on the aggregate margins?
We have not committed a large capex. We are only doing a value chain integration. We are getting a forging plant, fabrications ready, which will allow us speed of execution and also be more competitive. That capex is a small amount, less than about 50 odd crores. We will complete it. Like I said, first 6 months order booking has been a record, 65% higher than last year, and largely for domestic orders. A significant part of the orders that we are getting in are India orders. And these are also, I would even go to the extent of saying, largely government-driven orders. This will continue. I don't see any slowing down on this. It's in fact accelerating. India is a good space to be in today, and we are doing well in this space. So next 12 to 16 months or 18 months, we are not too worried. But we also realized to maintain the growth momentum 20% plus, we would need to have these Middle East and Southeast Asian orders coming in. And there we see some slowing down, and that will happen. We can't avoid it with so many wars happening. But the India story remains very, very strong, and that's a good thing. I should just add here one thing. We are all in what is called as a capital goods sector. This sector is still half and half domestic, half imports. As we go forward, a significant part of these imports would get converted to local manufacture. So for us who are in the capital goods sector in India, we see a good chance for using this downturn to see how we can accelerate and get a larger share of the Indian market itself. So I don't see a slackening, at least for the next couple of years.
Appreciate your time. Thank you for joining in on ET Now and giving us more clarity on how things are shaping up domestically, the export situation and business as well.